Chair, members of the Justice Group and others in the Institute. Can I start by obviously extending my thanks to the Institute for inviting me to speak here today. For me, a rare and valuable opportunity. That honour and privilege are mine and not, as the very kind invitation stated, yours. You are not privileged to have me by any stretch of the imagination. I should correct one small misconception. I'm not a QC. That honour, if it comes, is many, many years away. I hope that any thoughts...
Beg your pardon, it's the Rob Tansey who's the QC.
He very much is, yeah. I hope any thoughts I'm able to share with you will be of some use, and indeed, hopefully, I can get something out of this as well when we open up our discussion. When one considers that previous speakers have included Presidents Gorbachev, Prime Minister Brown, US Supreme Court Associate Justice Ruth Bader Ginsburg, I consider myself entirely fortunate if I am remembered as a mere footnote in the learning that they have contributed to what is a massive field. And hopefully for today's purposes, that footnote doesn't exceed 30 minutes by too much. Can I also start by thanking Katrina Heinel of the Institute, who, as you all know, sits over there, who's been instrumental in facilitating this talk and dealing with all the practical things that sometimes get lost in these sorts of engagements. I was, I think, fortunate enough, although it really didn't feel like it at the time, to be asked to co-author a textbook, International Money Laundering and Terrorist Financing, a UK Perspective. And there is, as Nora's kindly said, a copy floating around the room. This concerned, as the title suggests, thank you to my glamorous assistant, how the UK has dealt with the twin problems in its criminal law and its regulatory regime in the context of the international effort to combat the problems. It is the view of the authors, given the global scale of the problems of money laundering and terrorist financing, that any national effort to combat these, both in terms of compliance and enforcement, will only be as successful as, firstly, the extent of the holistic approach between properly executed regulatory and enforcement regimes, and secondly, the overarching international context allow it to be. Jill Donoghue identified as a matter of interest something that we wrote in our introduction. Traditionally, the world of compliance has been separate from the consequences of compliance failure. The views of the authors is that these two industries are better served if each has a working knowledge of the other. What should be done is inextricably linked to what happens if it isn't. As Alistair Darling, Chancellor, said, as chair of the Finance Ministers' meeting as the Financial Action Task Force for the first time in 4 years in 2008, we are all facing a persistent terrorist and criminal threat, unprecedented in its scale and international in its reach. Finance is the lifeblood of these threats. We agreed that the FATF was at the centre of the international efforts to combat financial crime by denying criminals and terrorists access to the financial system, and paid tribute to the FATF's excellent work to date. We agreed to remain vigilant and committed to protecting the international system from the threats arising from crime, terrorism, and all other forms of illicit financing. To this end, we agreed to step up our collective efforts and endorse today a revised FATF mandate, which equips the task force to be more responsive, strategic, and outward-looking in its efforts to protect the international financial system from abuse. Now, as always, wonderful words on great issues, and I will return to them shortly. But it leaves us with the area that I do want to explore with you today, if I may, albeit, of course, on a headline basis, as it can only be. International money laundering, enforcing compliance with AML CTF measures, a realistic goal or an impossible pipe dream. The question is, therefore, given the asserted aims as rehearsed briefly above, and our suggestion of the twinning of the regulatory and enforcement regimes when it comes to AML CTF, can we nationally and internationally create a credible, working, and effective system of enforcing compliance with whatever measures are introduced, or, without being melodramatic, is it simply all doomed to failure and a complete waste of time? I fear, from my own experience of how professionals and criminals in the UK are operating, that we may be in for some problems. What I want to do is to consider the issues briefly from the perspective of the UK, and then take up, equally briefly, the international elements overlaying our individual national efforts. As the Chair has said, I hope that there are some hiccups that I can identify for you out of the UK experience that will be useful to Ireland when it comes to its implementation of the third directive. If there is anyone from the Justice Ministry here, there may or may not be, I don't know. The question will be asked when we finish the speech, why it has taken such a long time to implement this directive. There is a draft heads of bill, there is guidance, issued in 2008, and the deadline was 2007. So some questions need to be answered. On the positive side, of course, it does mean, until you do implement, and even when you are in the process of implementing, you will have a considerable bank of international experience to pick up from to avoid some of the errors that are being made. Had time permitted, it would have been useful to analyse the extent of the problem of money laundering, terrorist financing, both nationally and internationally, and consider whether the concept of regulation in these areas was in itself necessary. In other words, analyse, if not challenge, the very notions underpinning the measures that have been introduced by reference to their development over time. However, we don't have this luxury, and I will assume, rightly so, that everyone is well aware of the problems, the scale, the costs, and the differences in relation to money laundering and terrorist financing, and that regulation is, in conceptual terms, a good thing when it comes to combating these problems. There are, of course, a number of resources that may be accessed in relation to the scale of the problem. I can also recommend a recent publication by Sweet and Maxwell on the broad topic of international money laundering and terrorist financing. Very worthy book. Turning to the UK, two headline themes, if I may. But before dealing with those headline themes, let me turn, because I cannot leave it aside, the issue of a likely change of government next year in the United Kingdom. This topic will also overlay the points I do make in relation to the international stage as well. The paralysis that encompasses and accompanies many aspects of political life when the mood of a putative administration upon the nation is beginning in the United Kingdom. Indeed, as long ago as 2008, August, a shadow minister was quoted as saying, "Nothing improper is going on, but officials are taking a close interest in our policies and thoughts." We had one senior official approach us with some suggestions on how we might improve a policy document. There have been some informal dinners and that sort of thing. In truth, no comment. In truth, any pronouncements from now on by the Conservative front bench are considered effectively government policy and legislation but a year in advance. The election must be called by June 2010. What it means is that we are, to a greater or lesser degree, going to be embarking yet again on another approach to AML CTF. This is illustrated by a very recent example. On only Monday of this week, David Cameron indicated that the Financial Services Authority, FSA, a key plank in the government's tripartite system of financial regulation, will be abolished if the Conservatives take office and its banking responsibilities handed to the Bank of England. The non-banking responsibilities will be handed to yet another new organisation, the Consumer Protection Agency. Mr. Cameron said, "This asymmetry at the heart of the banking system explains why there was such excessive risk-taking and requires far-reaching reform. We need to make sure the financial sector serves the long-term interests of the economy, not just its own short-term interests. So we will abolish the Financial Services Authority and will give the Bank of England the power to regulate pay structures, riskiness and complexity and the size of all of our banks, building societies and other significant financial institutions." The FSA has and had its own responsibilities for AML CTF and very much serves a purpose. Importantly, it has built up a large body of resources based on experience, such as its handbook and especially the Senior Management Arrangement and Controls, SISC, aspect of it. Equally, some of its members, including its current chair, have a wealth of knowledge to draw upon. Now, I entirely accept, because you may be thinking, well, what does banking have to do with this, that the Conservative approach to the abolition of the FSA has very little, if anything, to do with its AML CTF role or teaching capability. But that may just be the point. Throwing the baby out with the bathwater is never a good idea. This by itself weakens the holistic attempt at twinning compliance with enforcement. As Vince Cable, Liberal Democrat Treasury spokesman, said in response, "City institutions which straddle bank and non-bank financial services despair at the idea of going back to separate, competing regulators and at the prospect of the endless office politics as desks are moved and jobs are reallocated after this Quango war." Quite. In fact, there is a relevant reference tucked away in the 57-page white paper the Conservatives produced, a paper named From Crisis to Confidence, Plan for Sound Banking. It says this: the Sassoon Review questioned whether financial crime policy should remain one of the FSA's responsibilities. Others, such as Sir Ken MacDonald, former Director of Public Prosecutions, have suggested that the UK needs a new regulatory and enforcement authority to replace the FSA and the Serious Fraud Office. Those who commit financial crimes should face criminal prosecution and the prospect of a custodial sentence. And here's the dreaded part. We will ask the CPA to review its capacity to bring prosecutions and will ensure that the regulator has all the powers it needs to pursue criminal cases. We will also look at the case for a single regulator to tackle financial crime. And again, where the suggestion in relation to what I'm being saying to you is that one twins, effectively, the enforcement and regulatory side of AML CTF, this is a very worrying development. But it's a good example of the first theme that runs through the problematic field of enforcing compliance with the measures put into place to tackle the overall problems. The first theme, perhaps obviously, but nonetheless importantly, is that many measures are not targeted properly, others are not given enough time to bed in or resource properly. Furthermore, those tasked with their enforcement are not always given proper direction as to what needs to happen. It may be that such allowances won't in the end rescue any particular measure, but the phrase "only time will tell" is apposite. That said, there must come a point, and I deal with this in relation specifically to the MLR, Money Laundering Regulations as a whole, where bedding in must be said to have taken place and considerations as to efficacy must be given. The Conservative Party's approach that I've just dealt with above is but one example. On the so-called enforcement side, other UK examples of this first theme include the so-called failure of the Assets Recovery Agency, the body initially set up to deal with the proceeds of crime enforcement. This, said to cost too much and retrieve too little, was abolished finally and completely last year, and its responsibilities given to the Serious and Organised Crime Agency, SOCA. This was one of a number of false starts that helped nobody, although the UK government boasts about the success of its new agencies, such as SOCA, Her Majesty's Revenue and Customs and the UK Border Agency. Despite unfavourable comparisons with Ireland's Criminal Assets Bureau, James Earl, Director of ARA, said, probably the right thing would be a sufficient lifespan which we could prove the legislation. And of course what is happening now is that SOCA is reaping the benefits of the work that ARA has done. And it is making money, and it is bringing in more than it costs. But we had 2 or 3 years when ARA was left to wilt and SOCA was established, and what was happening in between was not very much. Additionally, there is the imbalance in resources generally. It was recently reported that in the UK, the fight against terrorism receives £2.5 billion a year, rising to £3.5 billion in 2010-11. But SOCA, in its fight against organised crime, receives, by comparison, only £400 million. Terrorism is a hot topic. It is vitally important. The problem is that the AML part of AML CTF tends to get lost when one considers where the priorities lie. And the resourcing, in my view, demonstrates that. On the so-called compliance side, the UK's money laundering regulations, our implementation of the EU's third directive, provides for HM Treasury to approve guidance. That, and I do spectacularly paraphrase here, if followed by professionals, will lead to a complete defence to any charge that they failed in their compliance duties. To date, and as you know, the money laundering regulations have been enforced since the 15th of December 2007, only one set of guidance is actually approved. And that guidance, in the form of the Joint Money Laundering Steering Group guidance, is, whilst making some specific suggestions, in the main non-profession specific, and its membership does not reflect all of those whom the MLR cover. This cannot instil confidence in those tasked in the front line, who even know what the JMLSG is, that they are firstly doing what they should be doing in an appropriate way, and secondly, that even if they follow their own industry guidance, someone might say they've done it wrong, and so wrong that they're going to be prosecuted or disciplined for it. Further, the training and educational requirements required under the money laundering regulations are lopsided and do not accord with our view that the interface between compliance and enforcement is unsatisfactory. Regulation 21, and I promise this is the only direct regulation quote, a relevant person must take appropriate measures so that all relevant employees of his are A, made aware of the law relating to money laundering and terrorist financing, and B, regularly given training in how to recognise and deal with transactions and other activities which may be related to money laundering or terrorist financing. This focuses almost exclusively on complying with regulations designed to catch transactions that may be offensive. In terms of the law relating to money laundering and terrorist financing, even the MLR in Regulation 21 permits lip service to be paid to this critical aspect. All those involved should have a proper, detailed, working knowledge of the consequence of compliance failure, not simply be given a handout containing the relevant sections of the Proceeds of Crime Act 2002, which is the primary place that our enforcement side of AML CTF lies. Many, of course, do, and many regulated sector firms and employers take these duties appropriately seriously. However, I myself have been asked by some firms to draft their guidance in relation to their employees in this area, the consequences of failure and what it can mean for those individual employees. It was the existing guidance that I was replacing that caused me the real horror. From my lectures on these topics to others, mainly lawyers, perhaps unsurprisingly, the level of knowledge has, with the greatest of respect to these colleagues and fellow professionals, been low. This is not their fault, but it is something that must be cured immediately. Sadly, I do not sense that it is a priority, although the government has recognised that there are still too many companies unaware of how serious organised crime directly impacts on their business and as a consequence are poorly placed to protect themselves from it. That is a direct quotation from the government's most recent strategy paper published this month. And all of that, first theme problems, sit very uneasily with the new mandate that Alistair Darling was referring to in 2008 when he chaired FATF. Because he said that one of the things they wanted to do was build a stronger partnership with the private sector who are at the front line of the global fight against money launderers and terrorist financiers. In my view, those fine words from April 2008 are not yet being put into proper and effective action. Finally, on this first theme, there is a new approach of the current government to tackling money laundering and terrorist financing as of July 2009. And this is of the greatest interest because it is my view that government finally has stumbled across that which is an appropriate way of dealing with these issues. The UK, I suspect, likes to consider itself at the forefront of the fight against money launderism and terrorist financing. Who, after all, doesn't? This, however, may be a difficult sell to the public when, for example, the government has had a set of qualified accounts for the Treasury. That said, on Monday, the terror threat was set to its lowest level since 7/7, down from severe to substantial. That decision, however, was made, of course, by a Home Office body, and the exact factors upon which that decision and assessment is based are unclear, parts being, of course, classified. So whether that positive factor in relation to CTF as a whole can be sensibly preyened in support of a working AML CTF strategy is open to question. But the main area of interest in this very recently published strategy into tackling organised crime, this document entitled Extending Our Reach, a Comprehensive Approach to Tackling Serious Organised Crime, as I say, published only this month, must be considered in conjunction with the other centrepiece strategy document, the Financial Challenge to Crime and Terrorism, which was published in February 2007. Note the date, some 10 months before the implementation of the Money Laundering Regulations. I consider the emphasis in 2009 on joined-up thinking in relation to compliance and enforcement entirely welcome. Finally, not a moment too soon. Indeed, it reflects what we were trying to say about that thematic approach in our book. There are still some worries, of course. In the foreword, Gordon Brown says, as we set out in building Britain's future, which was yet another economic strategy document, now is the right time, 3 years on from the launch of SOCA, with organised crime growing across the world and the potential for new opportunities arising from the global downturn, to build on what we have achieved with a new organised crime strategy. Now, the less charitable amongst us may infer that this is an admission that the government really didn't know what it was doing over the last few years, and finally, after studying everything that had occurred, had come up with an idea. That isn't merely me being cynical. The paper itself says 5 years ago, our understanding of the nature and scale of the problem was limited. That said, much of this document is genuinely worthwhile, in particular Chapter 8, creating a new partnership with business and the public. Government recognises the strength of the SAR regime, Suspicious Activity Report, and proposes measures such as organised crime advisors for businesses at risk for police forces on the model of the counter-terrorism security advisors. And it significantly says this, that it will create a new compact between the public and private sector to tackle serious organised crime by developing a new coordinated crime strategy, establishing an ID crime task force, closer joint working between the financial sector and law enforcement, and developing a voluntary private sector funding scheme. I hope, finally, that what that means is a real entwining, after 18 months of the MLR and many years of the Proceeds of Crime Act, of the compliance measures in place under there with that direct enforcement of the consequences of those failure in compliance. And importantly, it should be an entwining against the underlying perpetrators, the real criminals out there, but also against the regulated sector professionals involved. Not, of course, in the same way, that would be inappropriate. But something has to change when it comes to enforcing compliance measures, because ultimately the people who undertake compliance are the professionals. In the UK, the absence of education, as I say it to be, inadequate education, it's probably not yet appropriate, which is why, incredibly, after all this time, it's still in a bedding-in period. It's still softly. But there is going to have to come a time where that is going to change, and there may be some nasty shocks in surprise for professional people who consider themselves law-abiding citizens. The emphasis, although recognising that the approach should be successful at engaging public sector and private stakeholders at home and abroad in 2007, and to work collaboratively across the AML CTF community, including to share data and help reduce harm. However, and this is where we can notice the real change between 2007 and 2009, for example, was to reforms to reduce the burden of crime and security measures on business, including measures to simplify identification and due diligence checks within revised money laundering regulations, and a consultation on changes to the consent and tipping off rules. And in fact, the UK government takes the credit for the simplified due diligence approach within the third directive. So what a change between 2007, when the centrepiece strategy was minimising regulation and making sure it was targeted and effective and flexible, to 2009, where, over that period, I say the government has finally recognised that the approach must be to combine effectively, with all the tools available, compliance and enforcement. So the tone, 2009, very, very welcome. Moving on, the second theme in relation to the UK. In your own regulatory impact assessment, published alongside the heads of draft bill last year, in relation to Article 7, circumstances requiring customer due diligence, one of the problems identified was to eliminate a tick box approach. And of course, one can say that a rules-based system, as opposed to a risk-based system, may inculcate a tick box approach with those who are tasked with actually applying it. One of the problems that we have faced from my own personal experience, and this is to a degree anecdotal, and therefore you may find it of limited value, I don't know, although sometimes stories from the coalface are, as we all know, the most important way of pushing forward reform, is that a new tick box system has actually emerged. So having set oneself up by changing entirely from the second directive to the third directive, moving towards a risk-based approach when it comes to AML CTF, what has happened, to a degree, a lot of firms, people I have spoken to, is that the professionals at the front line simply draw comfort from the pro formas that are issued to them by their firm, from the limited educational opportunities that they get, and they simply make sure that they check the right boxes, they see a passport, they see a bill, and it all looks very good on the front of the file. If there's any hint of a problem, what happens? It gets passed up to the nominated officer, of course, part of the third directive implementation, and it becomes that person's problem to deal with. So instead of the risk-based analysis becoming a flexible approach, something to reduce, yes, the burdens on businesses, but nevertheless seeking to maximise the effective fight against AML CTF, what has ended up happening is that it's reverted to an extent to type. As recently as April the 29th of this year, this was illustrated when the FSA, the body, of course, you'll remember that the Conservative government in waiting is going to abolish, said, after surveying 228 financial firms, the FSA concluded there is significant scope across the industry for improving firms' systems and controls. Leading financial institutions were also said to be falling short. The report highlighted one specific area of ignorance among British firms, a widespread belief, this is in relation to CTF, that the sanctions applied only to foreign entities and individuals. In fact, the FSA reminded financial businesses that the banned list contains 50 individuals and 12 entities based in the UK. And this was in 2009. Further, another failing was that many firms were screening new clients retrospectively, sometimes weeks after an initial account had been opened, instead of before clients were taking on. Two themes, the UK experience. Let me move, because time's a ticking, to the international sphere and the second part of our theory, which was that effective twinning of compliance enforcement is only ever as good, in part, as the international context allows it to be. We bear in mind, of course, European efforts, the Council of Europe, the EU in terms of its directives, first and third pillar activity, what occurred at Tampere, as well as some United Nations activity, other broadly based networks. The history of the international community's efforts to fight against money laundering and latterly terrorist financing is well documented. Again, the underlying assumption, which we don't have time to dissect, is that a uniform approach by nation states acting in concert will drive the success or otherwise of AML CTF. Without it, individual nations or incomplete international groupings may offer scattergun approaches to the issues that simply could backfire. From the Council of Europe in 1977, establishing a committee of experts to consider the issues, culminating, as I'm sure you're aware, in a recommendation to member states on June the 27th, 1980, through the United Nations efforts in relation to drugs in 1988, the FATF's creation in 1989, and its 40+9 recommendations that came out of that. The European Community Laundering Directive in 1991, the first directive, the Strasbourg Convention when it came into force in 1993, through to the second directive in 2001, and the third directive and the Warsaw Convention in 2005, to name but a few. The international community cannot be said to have stood idly by. However, as recently as 2002, the World Bank and the IMF were very properly hosting conferences, introducing a number of African nations to the concepts involved and updating them as to challenges. This, of course, is welcome and necessary, but it does it not encapsulate the scale of the problem internationally that we all face? It is said that fine words butter no parsnips. Apparently that is said. I don't know who said it, but there it is. And indeed, fine measures, backed up with fine words and promises, don't always translate into action. Here, in the international sphere, I have also identified two headline themes. The first international theme involves nation-states simply opting out. An early example arose when, in 1988, the UN Convention Against Illicit Traffic in Narcotic Drugs and Psychotropic Substances was adopted. Countries such as the US and the UK already had measures in place and brought political pressure to bear on other nations to encourage them to do what was necessary. As we wrote, an immediate difficulty with the practical consistency of approach was Switzerland, an influential banking nation but not a full member of the UN. And so similar provisions were applied across Europe by the Council of Europe Convention on Laundering, Search, Seizure and Confiscation from Proceeds of Crime in 1990. Switzerland, in the 80s and the 90s, not so long ago. Using a contemporary example from the London Evening Standard this week, it was reported that the canoe man, some of you may have heard of him, Mr. John Darwin and his wife, who'd faked his death, may get away with the £500,000 investment that they had made because they did so in Panama. Detective Inspector Turnbull said this: "We will argue that over 6 years they benefited considerably from their crime and built up considerable assets in Panama. We wrote to the government there to restrain the Darwin assets, but we have yet to hear back," he said somewhat pithily. Thus, the first theme in the international sphere, perhaps obviously, but nonetheless critically, is whether it's Switzerland or Panama or Somalia or any other country you care to name. There will always be, over time, nations that simply opt out. That, whether the question is compliance or enforcement, is of course no use to global efforts of AML and CTF, and in fact it's a positive hindrance. But it gets worse. Where regulation is brought forth, countries that do deem the fight to be an appropriate one, not only will this not be taken up by those parts of the world who have no interest in obeying those sorts of laws, but others may migrate there, increasing the problem for all of us, an unintended side effect. The second thing is nation states and other elements within nation states opting out on a case-by-case basis. I use the phrase opting out generically there. It may be deliberate, it may not be deliberate, it may be incompetent, it could be a whole host of other things. But nonetheless, opting out is the phrase that I have chosen to use. In many ways, I would argue, a complete opt-out, as per the first theme, is actually more manageable because you know precisely what you're going to get. It's the question of those countries, or court systems, or specific groups within court systems or countries, for whatever reason, don't implement international instruments. Whether the phrase special interest group is appropriate in this context is neither here nor there. What is illuminating are the types of groupings and their reasons. For our headline examples in relation to this, I turn to the second and principally the third EU directive and the refusal or inability to start with of some nation states to implement them. We are getting a bit close to home here. By October the 26th, 2005, when the third directive came into force, France, Sweden and Greece all had material gaps in their legislation in relation to the implementation of the second directive. And indeed there was a criticism, possibly well-founded, that the second directive hadn't been given itself enough time to bed in. But that's history. Again, quoting from your own regulatory impact assessment, you said, in order to fulfil Ireland's obligations imposed by the third Money Laundering Directive, the appropriate approach to implementation is primary legislation supplemented by guidance. It should also be noted that Ireland's current anti-money laundering regime was criticised by the FATF for what it regarded as an over-reliance on guidance as distinct from legislative requirements. So even at the time of the bringing into force of the third directive in Ireland, its own answer to the second directive was being criticised by the primary international body responsible for AML and CTF strategic guidance. It's not only nation states. Two bar associations, Belgian and the French, challenged the inclusion of independent legal professionals within the second directive. That inclusion, limited financial or corporate transactions, including the provision of tax advice, was itself a compromise after the European Parliament objected to what it perceived as the proposed violation of lawyer-client privilege. What is now the Belgian Constitutional Court, as I'm sure you're well aware, referred the matter to the ECJ, and in June of 2007, the High Court ruled that the imposition of lawyers of obligations of information and cooperation with the authorities for combating money laundering did not infringe the right of a fair trial. So the Belgian bar had another go, and this time it went and stayed in its own national court. And on January the 23rd of 2008, the Constitutional Court held that advisory work relating to proposed client action was covered by client confidentiality. But where it was limited to advice generally or non-court-related work, it was not, and provisions could stand. The French Conseil d'État on April 10th of 2008 actually went further. Not only did it agree with the reasoning of the Belgian Constitutional Court, it actually banned direct contact between a lawyer and the French Financial Intelligence Unit. So let's just consider very briefly the impact there. The nation state failing in its obligations, other groups doing, for reasons noble or otherwise, what it can to put a spoke in a very important wheel. So much so that the High Court of France has said no contact between lawyers and the FIU. And that's in a context, when one looks at the third directive, of absolutely minimal coverage in terms of lawyers. It really is a very narrow compass, that which lawyers have to focus upon when it comes to AML and CTF as a part of the third directive. No surprise, on October the 16th of last year, some 10 months after the final date for implementation into national law, the Commission announced it had referred Ireland, Belgium, Spain and Sweden to the ECJ for action. As at June the 19th, and as I understand it, having made a very recent inquiry on my arrival, as at now, there is not a new publication of a bill, although the old one is there. There is no guarantee of Doyle time being given for that bill to be passed in the next legislative session. And unless there is anyone from the Justice Ministry here that can answer some questions on that, you have to ask what is going on. Whilst there are priorities, and of course...
Nobody wants to own up?
Not yet, we'll get to it. There are priorities, there have to be governmental priorities. One would have thought that this would be rather a large one. If only because, again, quoting from your own regulatory government assessment of all of this, any option other than full transposition by legislation carries a significant risk of damage to Ireland's reputation as a well-regulated financial centre. That's not a good start when you're almost 2 years out of time from implementing the third directive. It would also carry the risk of prosecution by the Commission for non-implementation of the directive. Well, that risk has come into being because you are. It's not just Ireland. I'm not coming over here to bash the Irish. Poland and Spain, on a slightly different issue, have refused to bring in penalties for those who failed to comply with the regulation relating to the identity of the sender of electronic money. Now, that's a specific CTF measure, and it was fairly sensibly thought that if money is going to be flying around the world in terms of SWIFT transactions and all these other abilities that exist to get money from A to B in a very quick frame, you should know who's actually sending it. That came about as an EU regulation, so it was of direct effect. As we all know, the difference between regulation and a directive. The problem was that the regulation didn't itself prescribe penalties. It left that to nation states to impose itself. And that's where Poland and Spain had simply said, no, we're not going to do it. So whilst it may be a breach of regulation in Poland or Spain not to send your sender details, nothing can happen to you. So what is of real interest is the fact of the non-implementation and the challenges from nation states and particular groups. We've also seen on a micro level from the UK experience the problems encountered at the coalface when trying to deal with what is actually required by the implemented measures. The problem, of course, is if everyone within any given sphere, be it global, regional, EEA, EU, simply geographic, is not singing from an appropriately similar song sheet on any particular measure, such as the third directive, and Ireland and the UK geographically, let's face it, are not that far apart, then the efforts of those who have implemented are going to be utterly undermined by a neighbour. We may equiparate this theme with the failure of the constituent elements of the EU to agree a uniform VAT rate, which would, for example, at a stroke, eliminate massive VAT fraud across the continent. So what conclusions do we draw from this? Firstly, it's a difficult area. The problems exacerbate in terms of the losses, changes to the natures of the threat, and the natures of the remedies required. The existence of that as your starting point is never a good thing. Secondly, whilst many measures are well meant and may be effective to a degree, there will not, in my view, be an effective, holistic, credible and rationalised system for ensuring as best we are able that AML CTF is properly dealt with in terms of compliance and enforcement. The current UK strategy, as spelt out finally in July 2009, is very welcome. But as ever, it is action that will indicate efficacy or otherwise. The international problems that exist in terms of those states which opt out, fully or partly, means others' efforts will not be able to reach their full potential. To end on a gloomy note, on March the 10th of 2009, the European Commission released its report on the world's illicit drugs market since 1998, up to 2007. Its very first conclusion was that the study has found no evidence that the global drug problem was reduced during the period from 1998 to 2007. For some nations, the problem declined, for others it worsened, and for some of those it worsened sharply and substantially. The drug problem generally lessened in rich countries and worsened in a few large developing or transitional countries. In other words, does it really matter anyway? If, for all that period, with all the efforts that everybody has made, those international instruments, first directives, second directives, which people had put into play, nothing really changed, at least from the drugs perspective, which of course, as we all know, is a significant, probably the significant driver to money laundering around the world. I don't propose any specific solutions to these difficult issues, and it's easy, of course, to criticise without coming up with alternatives, although maybe that's something that we can discuss in the time that remains to us. So I answer the initial question in the following way. Firstly, I reject my own either-or premise. Effective compliance is a reasonable goal for the international and national communities. But I am not convinced yet that what we all want, I think, sitting around this table, is actually going to happen. And if that makes it a pipe dream, then so be it. Thank you.
Thank you very much. Well, thank you very much, Nathaniel. And certainly